Good afternoon, Scott T3 Live. Welcome to today's recap. Woohoo! What a day. So, yesterday the market closed, I would say on a negative basis. Things didn't look good. I know I was only in like one long because I was like, you know what, should go home short, but I'm not going to. And then this morning the futures are up 10 handles. I was like, ooh, this time it's going to stick. And there was a quick, nice trade in the first 15 minutes, but the Dow went up 280 points in that first 17 minutes. So I think a lot of guys quickly jumped on, and I don't think many people shorted that first move because part of, in the virtual trade floor, I'm like, you know what, I would be a little careful shorting the first move with with Europe up almost, 1.6%, thinking that at least we get a quick move, let alone what happens next. So PS, market made its high, I think, by 9:42, and then, that time period for the next half hour is very tough because, if you were short overnight, unless you trade, paper money, hard to stay short. If you did, congratulations. You must have a thesis, and or you're using monopoly money. It's not easy, because that quick move. If you were short overnight, you're probably a trader, and you probably said, "Oh, I can't deal with this." So if you weren't short overnight, and like, okay, I don't want to miss a move. Now we had our first move. Now we're consolidating. Now let's start to get into some strong stocks that were looking decent. Apple was looking decent. You had, some other high beta names holding around. You had the spiders holding in. I chose Apple and the spiders, and then oil actually looked like it wanted to bounce. And then all of a sudden, I think it was 10:30, the level that I was using broke. And then the spider gap, which was I think 204.10, broke. And you could either done two things. You could have either said, okay, I'm out, that sucked. They squeezed the shorts, they just baited people in long, or you said, I'm just going to keep buying this thing because, I'm right. And if you did that, spiders went all the way negative and down $1, and I doubt you probably could have stayed in before the bounce. So anyway, let's just go to some of the charts. Here you go. This is what we have now. This morning, I drew that wedge formation. I posted it on Twitter saying, it looks as if market's in a pattern of indecision, doesn't know exactly what it wants to do. Then today, it took out the prior high of 204.60, went as high as 205.48, and then came back below. We all know that drill pushes through, fells. You do not stay long. That was why my stop was right around there. And then it pushed below the prior low, came back up and gave you this loose wide day, which, to be honest, I'm not exactly sure, what's next here. I'm actually, short a little bit overnight, which I'm never really comfortable doing. I probably should be flat, but we'll see what happens. We've had two up opens the past few days, and they can't hold, so maybe a little down open would be even, better for us. But at this point, you go to the 5-minute chart real quick, so you could see, what transpired. So here's, before we get into it, so this was the normal gap and go pattern where, boom, they squeezed everyone out through that 204.60. Made a peak here, and then into this is where I think a lot of us started buying. I started buying into this 205. Okay, turned up. I think some of us, I even added a little bit here, saying, okay, in order for me to make money long, we got to make some new highs here, but it's going to be hard considering we're up, 280 points in the Dow. But it didn't look like things were coming in. So in my head, I'm like, I'll give myself a stop here, which is around 205. Not even, giving it to here, or not even giving it to the gap, because I don't give myself that much room. So all of a sudden this happened, and that got me out of my spiders. So we were pretty tight. Okay, and then, that happened. So right there after that, I was like, you know what? I'm probably being a little too tight, considering we were up 280 points. Now we're only up 230 points. It came a little bit off that, and then I think I bought one more time versus. I'm like, you know what? I'm going to try not to be perfect. And then, it kept going, and then that's when I got stopped out. And I'm like, you know what? I'm done with this. It was like 11:30. I'm like, I'm going to the gym. I'm annoyed. And then, I look later. All of a sudden, if people are saying I'm going to give it to the stop or I'm going to give it to the gap, because if it were that strong, we should not get into this gap. Okay, you gave it a little bit more room, and then boom. There are some people out there that probably said, you know what, I'm going to short this thing into the upper end of the range when it breaks 205 or when it breaks 204.21. And great job if you did. You made a heck of a lot of money, especially if you didn't come in short, because you probably couldn't have done that. And then, this whole move happened. Then it hovered here at the lows and then broke that. And then now from 205.50 all the way down to 201.50, 4 points. You would think you wouldn't be pressing here considering the range and considering how stretched you were on the intraday moving averages. Right around here, I think we actually had a cute long. And then this is actually when we were trading in the afternoon. Just to show you, we intraday trade when things are moving around. I like to trade the spiders, and then I figured if we get above this 201.85, we could probably get a move back to here. So that was what was going on in my mind, just for a scalp. And then it happened. Sold it there. Not, and if it went higher, I would have been like, oh my goodness, we sold it too early. But for me, from below 201 to 202.50, I figured this was max pain area, and then it came back in and pretty much closed, right at the lower third of the range. And at this point, it still hasn't decided which way it wants to go. What wedges do is they wear everyone out. They wear out the longs who, are trying to be long here and not working, and they also wear out the shorts like they did this morning before a potential move. The market doesn't want you to go for a free ride. They want as less people making money as possible, so that's why these wedges at key areas happen. We all get focused on it because when it does resolve, typically you get some kind of follow-through. When that follow-through happens, you want to be on board. The IWMs looked good, and then they pushed through and failed also. Okay, I was getting someone on Twitter was making fun that I called out because at first the IWM was at highs first. It went through 118.84. Okay, after a move from here. But what happened? Did it hold above it and continue? No, it failed. So it could have got you out. And then it came back in, and now it's loose and wide, and there's not much going on there. Then you have the IBBs. When the market was rallying, it looked pretty good, right? First you had this inside range. This is getting, a little choppy. Here you had that first, you had the first breakdown that some people got short, and I think all the bears out there were finally calling for a short, and then that happened, so that had to squeeze you out. Then you had 3 inside days here, but what was it doing was holding above this prior breakout, so it made sense to take a trade long through here, and if you sold it, you probably could have made money on some, because what do you do? When you push through a level, you sell some strength, and then you hold some to see if it holds. So if you go to a 5-minute chart, okay, here was your gap up above this area. It pushed through that 319 high, gave you 2 points, pulled back, held, went as high as 322. So if you got long in this gap when it cleared here and you didn't sell on this pullback because you made a higher low, chances are you made some decent money in that. But then if you were watching and saying, okay, I'm going to watch this close, if the market starts to fail, I got to do something here on the IBBs because it has come a long way and it is pent up. But right here, it should not really break 321, and it definitely shouldn't break this, which is at 319, which was the prior high, because what do we talk about with false breakouts? So if you were trading it really tight, that's what you should have been trading it against. And then that happened, and boom, you should have been out of it right there. If you were waiting for 319, okay, too. But then that was your stop. And then it went all the way down to boom. You don't have to be in that. This looks good, then it changes. Okay, and if you map that up with the daily, here was your high, pushed through, failed. Did it fall apart? Is it dead sector walking? No, because it still held the 8th day, but it's getting a little wishy-washy. Same thing like here. So that's how you use your intraday 5-minute charts, overlaying it with important levels from the daily chart. So if something's up 3 days or 2 days, it could be up a 4th day. But also, if it tries to go for a 4th and fails, that's the RDR. That gets you out of your long, and that gets you maybe, if you're not in it anymore, looking for a cute short versus that high, and you play the two, the directions back and forth. Qs also just in the smack in the middle of the range. It's these type of loose wide patterns tend to be more bearish than bullish, but I guess we'll wait and see. Below the 8 and 21 day, it's like hovering in there, but it's still above the 50 and still above this. So at some point, we'll see what happens there. The banks have been the weakest, but maybe they're setting up for a rally because earnings are coming out tomorrow in JP Morgan and Wells Fargo and then bank. So they're pretty much priced for horrendous reports. So if the reports are good, maybe that bounces. So we'll see there, but maybe not. If it breaks below this, pretty dangerous. JP Morgan barely holding on to the 200-day. It's been around here for a while. So we'll see what happens next. If it breaks below it tomorrow and it can't come back above it, could add some weakness. Then you had Apple, which took off fast. I had a good trade there long, and then it failed. So that too, you could have got really stubborn with, saying, "Oh, double upgrade, blah blah blah." Got to stay in it. I'm not saying it's game over, but it just shows you how hard this stuff is. It comes into here, pushes through by 10 cents, and then can't get any traction. It's still in the upper end of this range, so it's still better than most high beta tech stocks out there, but not ready yet. I was I was long right here. Okay, so this is the same type of thing. I was long in here. I wasn't long overnight because of the way it traded the prior day. Look at that move lower. So here's your gap up, got long here. And then this was the prior high. I added, I think, right here. And then I was looking at when this happened. I said to myself, ooh, that's a bad bar. Meaning like this first 5-minute bar that just engulfed the last 5. So to me, that looked as if I better be a little careful. And I did not sell it into that. I actually bought more into here, thinking, okay, maybe it holds. And then once it broke this, I got stopped out of my Apple right around 112. Okay, kind of sucked. Bought it here, added here, was a wash play. But I got out of it and I didn't get crushed in this like you could have. You could have bought this, bought this, bought this, and could you have held it all the way through that, all the way down? Probably not. And if you're looking for a short into resistance and you've been making money that way, I don't like to short resistance. I like to buy breakouts which aren't happening. That's why we're getting frustrated. But anyway, you could do it with a tight stop. And look what happened from there on. And if you wanted to wait for also this gap to get filled, first it came in, was a little bit of a fake out, and then boom. So there was money to be made short here too. I think some people probably flipped, but this was the trend that started the day. Here's your wide range bar, wake up, comes in, doesn't even come back to retest that. You have a bit of a bear flag, continuation. Get out of your long, maybe even get short. I actually made a little bit of money at the end of the day, on the little bit of a snapback. So this is kind of the same thing. So here you are, trending down, get your into support, you get your first, I would say this is your first little wide range bar to put it back in the game, high or low. Then you had another one here, and that gave you a move back into prior resistance, which hopefully you sold some, and who knows what's next. But there are ways to play, you can almost go like this, ends of the range. Here was your 5-minute bar to get rid of this uptrend, and then here was your 5-minute bar to almost get rid of the downtrend, and then we wound up in the middle. And if you're trading actively, that's what you have to look for, and then overlay all your other thoughts that are going on within there. So I want to show you something else with the spiders. So the spiders, made a low here at 2 o'clock, right? So that's the low at 2 o'clock in the spiders. And then at 3 o'clock, it made a double bottom. So let's look where USO was at that time. USO, the low was 2 o'clock, okay? So let's go back to the spiders. Spiders low, 2 o'clock, and then at 3 o'clock, it retested it. Did the USO come back and retest the lows at 3 o'clock? It didn't. So I tweeted, I said, on that pullback, the oil held higher. So it could have been just a day trade for you. You had an igniting bar, first igniting bar in a while, held higher. Okay, this is the low. You go to the spiders. What happened to 3 o'clock on the spiders? The spiders came back and retested the low. So it gave you that double bottom before that. And then you come back up, and this held in there. And then when the market bounced, it gave you a decent bounce. First 40-cent bounce in the USO. Some guys are trading that the other one short. What is it? WDTI or DTI or one of those reverse ones. Sperling was trading it, and I know that he tried it in the morning, got stopped out, and didn't go back to it. But basically, that reverse, so you could have been playing that. It's a higher priced instrument. So that was your first divergence. The divergence that didn't happen in the morning, but the divergence that happened at 2 o'clock as it didn't double bottom at 3 o'clock. So just saying, these are things that we look for. We don't, we listen for news, we look for headlines, we see how things are going, and we look for divergences within relationships that we usually trust. So now the question is, if oil's up tomorrow because it had a small reversal today, what's the market's going to do? I don't know. So we'll see, because it's kind of diverged at the end of the day. You look at the daily on the USO, and you put some, volume in. Just say you go to basic studies, go to volume. Okay, you see a lot of volume down here, but it's not like you're seeing like a crazy capitulation volume. But you do have your first green day, and you saw the divergence there. So if you covered your short, fine. If you've been short through all these thresholds, why not cover? Okay, look at the trend that broke here, a trend, support that broke there, threshold that broke here. So if you've been shorting it this whole time and you see a small divergence, take advantage of it. And that was what today was. So we'll see what happens tomorrow. I think Russia, if I was playing loose, I would say maybe Russia has a little bit of a bounce off support, considering oil seems to have found some traction. But I'm just not going all over the place. So I'm trading kind of tight because my year started off sort of flattish. I got caught on that first day or two of the year and then regrouped, made some money back, when we had this nice little rally from this end point. But on this little 3-day pullback, into this, I've been kind of chopped up, making a little, losing a little. So I'm not looking to be a hero, all over the place. Oops, sorry. What am I doing here? So we'll see. Some guys are like, Red Dog, G Pro, it's getting crushed. Okay. It's been horrendous. Okay, you had this first move here. I remember we played it long. Here was your day one. Day two, sold it here, was done with it. Then when the market rallied, it couldn't rally. And then it broke this range and done. Okay, what is it? Is it below all the moving averages? Yes. Is it above the 8 and 21 day? No. So it's a momentum name to the downside. You get out of that. This was when G Pro was great. This is when G Pro was, a momentum name. When it broke above the IPO high, followed the 8 day, gave you trades, across the board, across the yin yang until right here when it broke, and then it became a choppy mess. Also broke right here. And then just, day trades. That's all it is. Here's when it's a pent-up trend. Here's when, it turns into day trades. Same thing. I was looking at the high beta names. Yeah, you had a little bit of a bounce, but still, Google below all the moving averages. Amazon, shorted overnight. It's got everyone squeezed, and it's still not really such a big move. So at this point, it feels to me like more stocks are kind of bent and breaking than constructive and ready to go. So that's why I'm leaning a little bit short. If we gap up tomorrow and we go, it's not going to be fun because no one's going to trust it because today, So in my head, we had 2 gap ups that failed. Best thing for the market would be a gap down because, everyone's kind of scared to be short versus what, transpired, but we'll see. One other thing that I want to show you. What time is it? It's now 4:24. I actually got to get going. So either way, there's a lot of volatility. Hopefully you're taking advantage of it. It hasn't been easy volatility. For the Dow to be up 280 points in 12 minutes, not an easy thing if you're short to hold through. And same way if you waited and you didn't want to be long and you wanted to wait for that first 15, 20-minute pullback like I showed you before, it never saw a higher high, and then you had to get out of the way, otherwise it could have been a disaster. So reduce your size, reduce the amount of things you trade, be happy with making money. Don't give money back. If you were up, good money yesterday and you're down half of it today, just stop. Net money every day. That's how you put together a week, a month, a career. If you're up good money one day, you give it back and then some the next day, up small, down small, you're not getting anywhere. Net money. That's how you make money as a trader, and that's how you have a longer career. See you at the morning call. Have a great night.